Coming up, another Norstar Trader Market Minute. Norstar Trader uses technical analysis to review stock picks made by fellow YouTubers and industry professionals. Please be advised that we are not your broker. This is for educational and entertainment purposes only. Trade at your own risk.
Hello everyone, this is Paul Prescott for Norstar Trader. Today we're going to take a look at ARKK. But before we do so, I want to just let everyone know there's a link down below this video that enables you to go to our website where you can get a chart that looks very similar to this that has our indicators on it. It has the bull-bear line, the terminator line, and the NMAC. So take a look at that and enter in your stocks and see how they fare up. So let's take a look at ARKK. Now, right now, what's going on right at this moment that we're resting right on the bull-bear line. But let's zoom out a little bit and let's tell a little story about this stock. Where was the place to get into this stock last year? Well, the place to get in was after it fell and then the NMAC crossed to the positive. This was after the COVID crash, and this was the place to get in. What date was that? That was on March 24. Now, about a couple of weeks later, it came back down lower than that position. However, the NMAC did not cross back, so you know you were good to stay in the trade. Now, if it did cross back, you would get out of the trade. But since it did not cross back, this was actually a little divergence happening here where the stock went lower, but the NMAC stayed higher. And we continue our way up. Then what happened? The NMAC, the cyan line, crossed over the zero line. This is the long line. Here's the zero line. When this crosses over, then we get some serious price appreciation. So now we'll zoom out a little bit. And we can see we were right here. Obviously, we got all of this price appreciation. So the cyan line now remains over the zero line for this entire time. We got one little dip over here, which you waited one day and it corrected itself. You didn't have to do anything. And then we got one other dip over here, in which you had to wait maybe 2 days. Now, you could have gotten out of this trade. You could have gotten out right here and just waited a couple of days. And then once you cross back over to the top side, get back in and resume the trend upward. The other thing you can do is, now remember the rules. The rules is first you look at the NMAC. When the NMAC crosses the zero line to the downside, you check to see how far you are away from the bull-bear line. If you are far away from the bull-bear line and you may not be able to stomach that distance in terms of loss, then you get out right then and there. If you think you can handle a little bit of loss, then what you do is you hang in there and you wait for it to recover. So once we resume, we see that the cyan line stays way above the zero line. And there's nothing to even worry about. You stay in the trade this entire time. Until when? Until the beginning of this year. Now look, that was an entire year that went by. That's what we call a short-term trade. That was actually a long-term trade. But short-term trading is not about jumping in and out. It's like a day trader. It's about trying to maximize your profits over a short period of time. Now, what's going on here? We get this crossover of the NMAC. Remember, that's rule one. Look for the crossover. Then check your distance from here to here. And you say, can I stomach this loss if it were to go down from here to there? And let's say you didn't want to do that. Say, I made enough money. So you get out of the trade. And then you watch it fall. And then what happens is it crosses back to the upside. Now, this is where it gets tricky. And this is where it starts to chop. Chopping means that it goes up a little, down a little, up a little, down a little, and without any real direction. So we come up, it rolls back over. You have to get out of the trade, right? Because why? Because now you're below the bull-bear line, and you're below the zero line, and you crossed over to the downside of the NMAC. So you wait a few days. Crosses back up to the other side. You take another shot at it. Goes up a little bit, fails again, crosses back down. Once you hit here, you got to be out of it one more time. Then what happens? We cross back up again. Now, in these instances, you took a little bit of a loss here. You took a few dollars loss on each try. But what you're trying to do is establish the trend. You're trying to jump on the train here in case it starts heading up again. Now, what happens here, right on 520, she crosses over on the NMAC one more time and then heads up. And then look, never crosses back over again, right? So we get this nice run upward. And then we get closer to where we are now. We'll zoom in on that. The NMAC crosses over, but we're still above the zero line. And we wait. We give back most of that profit, right? But we don't get out of the trade. Why? Because this crossed to the downside, right? Crossed below the zero line. But look, every time it held on the bull bear line. So you stay in the trade. It touched it 3 times. Now, if you want to see what really happened, we'll just back out again one more time. And I want to just show you something, what is interesting, what's been going on here. When it came from these depths, it came up, got rejected, came back down, made a higher low, then cut through the second time around, came back down, tested the top side again, right? Tested it here, tested it here, tested it here, and now where are we? We're testing it one more time. So if I were to get out of this trade, I'd be getting out if this crossed tomorrow, if it's closed below the bull bear line and the NMAC was negative like it is right now, below the zero line. If those two things happen tomorrow, then I'd be out of the trade. If you really want to play this very long term, you could just use the termination line and not worry about anything. But obviously, you'll be making a lot of profit and you'll be giving back a lot of profit here. You're just getting into the very long-term trend, and that's what I call the ultimate cutoff point, is the termination line. So if you look at ARKQ, ARKW, they all kind of look the same, and they're really playing out the same way. That chart looks almost identical. That's ARKW, and if you look at ARKQ, that's almost identical, and if you look at ARKF, that's very similar as well, and you play them all the same way. ARKF crossing to the downside, but look, that's sitting over the bull bear line, so you hang in a little bit longer. All right, so again, I have a link below. You can get the chart. You can take a look at the chart, this chart on our website. You can put in your symbols and see what you're trading and see how they fare up. All right, thanks for watching.